So, welcome to a special episode today where I get to interview a fellow finance YouTuber, Mike at Recycle Your Money. He first got started in the finance IG space several months ago, but he eventually made his way onto YouTube and he's quickly grown to 5.2K subs in the last few months. I've been following him ever since then. And yeah, pretty much after I saw his great first video with Margin Mindset. He's also someone that's living out his brokerage like I am, but he's approaching it from a pure growth and margin angle instead of through a hybrid growth, high yield angle like I am with margin, which is super cool. I'm always about people being exposed to different ways of doing things. He's close to age to me. At 33 years old with a super impressive net worth of 800K across his brokerage and real estate portfolios. He also has a gross portfolio value of 680K right now with the one that he shows on his channel every week. And yeah, like I always say, there's lots of different ways to approach reaching financial freedom and living out of your brokerage. And I'm excited to dive into all that with him today. And yeah, contrary to popular belief and what sometimes goes into the comments, like although we approach things very differently, we are totally cool with each other. So yeah, Mike, you want to get started and kind of tell us kind of how you got started and what was the kind of your big inflection point with investing?
Yeah, so thanks for having me on. First off, I got started I would say when I was 25 years old, I read Rich Dad Poor Dad, and I just was wondering why I didn't have any money. So I was, I had like no net worth. I had a paid off car, but I owed student loans. So from
Mhm.
there, I had started to dollar cost average for a few years until when I was 29 years old, I saw an Instagram reel from Damon on Shark Tank. And he talked about how the wealthy don't sell assets. And I sort of knew that with real estate, but I had never seen people do it with stocks. And he talked about how they maybe will own a bunch of Apple and they will borrow against Apple and then use it to buy more stocks or to buy real estate or to fund their business. And I thought this was crazy. So from that moment, I pulled out my phone and I just wrote a little ebook. Not even an ebook at the time. It was just 2 pages in my notes and I titled it Money Isn't Real. So after I saw this Instagram reel from Damon, I went and I did some research and I saw that you could borrow margin at like 12% with Fidelity or something like that. And I was like, this isn't what it sounded like Damon was talking about. So I did more research and I stumbled across M1 Finance, where you could, at the time in 2022, borrow on margin at just 2% interest. From that moment, I was hooked. So I moved all of my money, which I had maybe $20,000 in Fidelity, over to M1 Finance. I had a paid off car and I called up the bank and I borrowed $18,000 from my paid off car. I then used that money to invest into my new M1 Finance account, where I then had about $40,000. At that time, we were sort of at the top of the market, right when it was about to be the crash that everyone is aware of in 2022. The market fell maybe like 25, 30%, something like that.
Yeah, 32%. That was a crazy,
It
crazy year.
felt rough at the time.
Hmm.
And at about 10% dip, I had leveraged up. So I borrowed money. I borrowed as much as I could. So I had probably 40,000. So I borrowed about 20,000 and I bought more shares. I then realized that when you borrow and buy, it inflates your portfolio value, and then you can borrow and buy again. You can borrow and buy half of what you just borrowed and bought with. So then I could borrow another 10,000. I did that over and over until I had maybe like 50% margin health or something. I was quite leveraged, and I also had used external leverage from my paid off car. So that's really what got me to $100,000 portfolio very quickly. And then it's just blown up over the years. I've been living out of my brokerage since with an all growth approach.
Yeah, that's awesome. And yeah, I had a similar experience when I first started getting investing as far as like kind of just getting hooked and just basically kind of throwing all the money that I had there. Cause I had like, I think at the time, like 40K and like just sitting in like a high yield savings account. And then I started with like, all right, I'll start with like 5K that I invested. And then the week after I was like, okay, I'm throwing a 10K. And then by the end of that month, I just had everything. And I was like, yeah, just want to be fully invested and have all my money working for me.
It's super addicting. So the thing is, I saw that I had quite a bit of gains from the years before. So I'd been investing for maybe like 4 years at the time, and I saw all the gains from those years. So I knew that investing works. I just didn't
Mhm.
realize that this whole time I could have been using margin intelligently and been growing much, much faster.
Yeah, it's super interesting how you do it because, like, as I understand it, you basically invest. your full income into your portfolio, right? But sometimes it might split between either fully investing it, right? Or you might actually just be paying down the margin. So
Exactly.
like how do you kind of determine when you're doing either, right? When you're actually investing that money or just paying down the margin?
Yeah, great question. So when the market is about 10% from all-time highs, and when I say the market, I mean something like the S&P 500, I
Mhm.
like to start to use some margin. I don't have a rule as like I use X amount of margin. I just like to start to sort of dip my toes into the water, so to speak. And as your portfolio grows bigger, that dipping your toes into the water looks bigger and bigger. So that might be like $15,000 in one day or something. But when you're starting out and I had that little $40,000 portfolio, it might have been like $2,500 or something that I had used. And I would do it a few times. And the reason is just because people will dollar cost average, like it might continue to fall. I might want to continue to make bigger and bigger buys as it continues to fall. And then when the market's recovering and coming back up, I will start to pay off margin using my income to do so. So, with my strategy, with your strategy, every strategy, you need to have positive cash flow. So, this will not work if you don't have positive cash flow. I like to say that you need to have at least 500 a month in positive cash flow to be able to do this, but the more the better. So, 1,000 a month would be much better. And anyone with $1,000 per month cash flow can do something like what I'm doing.
Yeah. How would you recommend someone with like kind of like a smaller amount starting out? How would they start doing this pure growth and margin strategy, you
Yeah,
think?
so let's say that you do have $1,000. Let's say that you have a $500 positive cash flow and you have maybe you're like your early 20s or mid 30s. You maybe, like me or you, used to be a saver. Many of us have grown up in maybe a middle class family where our parents taught
Mhm.
us to be savers. And that means you probably have like 5,000, 10,000, 15,000 sitting there in savings. If I were to start over, what I would do is I would keep maybe my living expenses plus $3,000 to $5,000 in a checking or savings account just on hand to be helpful. And I would invest all of my money outside of that into growth ETFs. And those might be something like VGT, SPMO, QQQM. Those are some of my favorites. I always like to hold a little bit of VOO just as sort of an anchor. I treat it more like a bond than anything to keep me from getting
Just to
hit
at least
quite
match
as
the
hard
market.
when the market goes down. It doesn't feel good sometimes when you get hit like really hard, really fast, and you're leveraged. So then I would continue to maybe build a strong foundation, build a strong base, and I would dollar cost average that $500 into the market and live off of my what is it, maybe $5,000, $7,000 that I have in my checking account and use all of my extra cash flow to continue to build a strong base until the market falls, at which point I would then introduce margin and I would leverage up to buy more and more shares. I wouldn't use any margin starting out until that happens. Maybe if you have a really small portfolio, you can introduce a small amount, maybe like 10% of your margin health. You could, meaning that say you have like 100% margin health because you haven't used any margin yet. You could maybe use 10% of it and save the rest for a great opportunity. No one knows when it's going to be, but then you're prepared when opportunity arises.
Yeah, and really like if people are getting started out with margin too, I always kind of recommend to really just start small, just to kind of really
Mhm.
understand how the margin buffer numbers work, how the equity works, because it's not like as simple as you'd think sometimes, and you have to kind of do a little bit of math to kind of really understand it. So
And
definitely
it
go
works
slow and
different
don't
in
go so
Robinhood,
hard.
is my understanding. So in M1 Finance, you have that nice like that meter that shows you your portfolio can fall this far. And in Robinhood, it sounds to me like you have to do a little bit of math.
Yeah, yeah. So because they go off your margin buffer off your net portfolio value, which is fine because it's kind of it shows those numbers. But like I feel like it kind of lacks the kind of taking into account the amplification, right? So
Yeah.
I like doing those like personal calculations on my sheet to kind of really understand like what my gross portfolio value would have to fall to kind of like be basically the equivalent of that net margin buffer essentially, right?
Yeah. I
So
don't want to
a
see
little.
anyone get margin called. So be very careful, do some research and make sure that you're not over leveraging. That's why I do very much agree with you that you need to start small and then as you get more comfortable, okay, this is how this works. And then you can start to amplify things.
To really get a handle on things. And I guess with your portfolio too, like what's your end goal with the portfolio and the growth and margin strategy? Like, do you want it to grow to a certain amount and then retire early and live off it? Or like, do you want to make as much as you can and retire at a normal age of like 60 and just have like millions and millions at that point? What are you
So
thinking?
I do not want to work until I'm 60, but I
Yeah,
do
same.
want to get, say, 3 mil, 5 mil in the next. So 3 mil, I would love to get by the time I'm like 37, 38 years old.
Yeah.
By the time
Nice.
I'm like early 40s, like 42, 43 years old, I would love to have a $5 million portfolio. And then I can borrow. So you use a hybrid approach where you get income from your portfolio. And people ask
Yep.
me, how are you going to live off of your growth portfolio? I don't want to sell shares. I want to be able to
Just keep
have my
compounding.
portfolio be
Yeah.
so big that I can borrow, say, $150,000 a year in margin or whatever number I want, and I can live off of that tax free, and my portfolio will grow much faster. And it's
Mhm.
big enough to where it can account for like a 30-40% drop in the market where that doesn't get me margin called and doesn't get me into trouble. The thing is that that 5 million is going to grow so
So
fast
fast.
in compared to how the 150,000 is gonna, like, adding 150,000 of margin per year won't matter at that point.
Yeah, yeah. If you have like 500K margin and your portfolio is 5 million, it's like a drop in the bucket, really.
Absolutely. Yeah. So
Got
that's
it.
my longer term plan. And I don't like, I'm 33 years old. I like working, I like making income, but there's going to come a time when I don't want to do it. I want it to be 100% optional. I do have a lot of
Mhm.
autonomy in my life right now, and I'm very happy for that. I guess a few things that I do to amplify my just income that I think everybody should do that I talk about. Not everybody's not going to want to do it, but is one thing is house hacking. And I don't think that you've done this, but this has really sped up my
Mhm.
journey is having, like, even if you own your own home, you can rent out a room or two and it amplifies your income big time. That
Yeah.
is shout out to Scott Trench for pointing out to me that the two biggest areas that people don't pay attention to are housing and transportation. And those are the two biggest
The biggest
areas
cost.
where the
Yeah.
cost is the highest.
Mhm. Yeah, whatever you can do to lower that will pay a huge dividend in the end. One hypothetical, maybe fun slash spicy hypothetical question I want to ask you, like, and given that I've just kind of gone through this experience, so I'm kind of just curious of like you hypothesizing on that, like, so let's say you were to get laid off tomorrow from your current job. So I know you work in like property management and stuff, and for whatever reason, for whatever crazy reason, you can't be a real estate agent anymore. To add an even bigger wrinkle,
Fair
and
enough.
so like let's say you're out of work for the next 6 months, essentially. Like, how would you still go about living out of your brokerage and investing in growth and margin as you kind of job hunt over those 6 months? Anything
So
you'd move
I
around asset wise or money wise?
I do think it's important to keep your margin health at a safe level. So in bull markets, I like to sit at maybe like 80% margin health. That, and I'm not there yet. Right now, I'm at like 65%. So, like I talked about before, is when the market's recovering, I like to increase it. That type of thing you can't really plan for. Like, you maybe didn't know you were going to get laid off. I know that you kind of had a feeling, but
Yeah,
if
the
that were to
industry's been
happen to
crazy.
me, it still sucks when it happens. It probably
Yeah.
doesn't feel good at the time. But what I guess I would do is I would just start applying for every single job that I could right away. As far as, and just honestly, I would like take any income over like no income. Yes, right away you should file for unemployment, which you did.
Mhm.
Fantastic work on that. And that helps offset it a little bit. But I would pause investing and I have enough margin. I have a line of credit of like $150,000. I guess I'm
Mhm.
not sure what yours looks like. I know you're quite leveraged, so I know
Yeah,
that
I know.
you
I have
might
like
not be able to do that.
42K roughly. Yeah.
42?
Yeah. As far as cash available for withdrawal, and then like 84 for
You got
margin.
hit with like another double whammy as the market was down when you got laid off. So that
Right. Yeah. It was
also then
literally
your
like the
line of
week
credit's
after.
way down. Yeah.
Yeah, it was crazy timing.
So that's what I would do is I'd be happy to take whatever income I can get by just applying for every single job and then using it as just like a, hey, I'm only going to do this until I can get something else. And my strategy wouldn't really change. I would continue to live off of the margin line of credit. I just wouldn't be buying new shares and I wouldn't be investing at the time. I'll just pause the investing, pause the paying down
Mhm.
margin. But I guess like you mentioned, if that happened during a big recession, that would be tough.
Mhm.
But to play devil's advocate, yes, you said if I couldn't be a real estate agent anymore, I am a real estate agent, which is 1099. in
Yeah.
addition to working at a W-2 job. So I can always go attempt to sell houses. It's not guaranteed income, but I can
Mhm.
go like door knock, I can go cold call, I can do anything and everything to try to get my income, to get some income.
Yeah, yeah. No, that makes sense. So you wouldn't necessarily like sell any assets. You just kind of like just pause
Nah,
investing entirely, and
I
so
would
even
not
any
sell
any
any
new income that
assets.
you get, would you still deposit that to your portfolio? You think, or would you just use that for living?
I would use it for living. And I do have
Okay.
one rental property, so that does help. And then and it gives me about 600 a month in cash flow. And then, like I said, house hacking is also very, very helpful. So those couple things do bring me some income that, no, I'm not an income investor, but I do have maybe some income that comes from outside sources such as real estate and house hacking that really does help. I see the appeal of income.
The cash flow, yeah,
Yeah.
it is nice to cushion things. Yeah, when I had my life, I was really thankful for still having that existing cash flow for my portfolio for sure. Really helped cushion
Yeah.
things in
You
that
have a
sense.
lot.
Yeah, that's 4.6K a month
4,600
is
is a lot.
yeah. Yeah, I've been happy with it, and then yeah, just hopefully just keep growing it and actually replace my full salary eventually is the
Heck yeah.
hope.
Coming soon.
And sorry, yeah, coming soon.
Coming soon.
Yeah, and I mean, same goal in that sense as you. Like I just want to keep having my portfolio compound and just keep growing in the background and never sell. So it's like that's just kind of never interrupt that. I guess another on the topic of real estate, like you mentioned in a video maybe a couple weeks ago, a couple months ago, that you were debating selling out of all of your real estate. Is that something that's still happening this year? Like, and if so, like if that capital clears up, are you thinking you're just going to reinvest all of that into growth in your portfolio to boost things even further?
Yes, I love it. I really prefer stocks over real estate. I'm going to keep
Hmm.
the one rental. So here's kind of how things have changed for me since I maybe posted that video is it's actually for sale right now. One of my rentals
Hmm.
is, and I've had to do a
Nice.
few price reductions, which sucks, but got to do what you got to do. And I will take that equity and I'm going to use it to pay down my margin to get to a healthier margin percentage. So I'm going to be at probably like 85-ish% margin health. It'll be pretty high. And then I will just continue to dollar cost average until we see the next downturn. Every
Hmm.
single dollar that I touch is going to go into the market buying new shares regardless of the price. Then when
Nice.
we have the next market downturn, I'm going to leverage up quite big so
Go
that
heavy. Yeah.
when it ends, I'm going to be sitting really pretty. I'm going to keep the other rental, and since the time that you've seen that video, I refinanced my house on a 15-year mortgage with
Mhm.
a 3.875% interest rate.
Oof, that's a great rate.
Heck yeah. So
Yeah.
planning to stay in this house for quite some time, and the other house I will eventually sell tax free by moving out of this house back into that house. Cool thing, if
Mm.
anybody doesn't know this, is there's something called the 205-year rule in real estate. If you live in a home for at least 2 out of 5 of the last years, you can sell without paying capital gains tax. It's up to $250,000 if you are single, and it's up to $500,000 if you're married. If there's any depreciation recapture, you still do have to pay depreciation recapture.
Yeah, that one's an amazing one. I've read about that one in the past, and I was like, oh, that's a really good one. And plus, on top of that, you're also hacking your current place. You were saying too.
Yep. And
Yeah,
I think that that's underrated. I
yeah.
have been doing this for about 4 or 5 years now, and I wish I had started sooner. It has
Mhm.
gotten me so much more wealth so much
Frees
faster.
up so much cash flow. Yeah.
It does. And the thing is, I forget who I heard this from. It's a long time ago that I heard it, but it's like you were house hacking until you were 18 years old anyway, living with your parents.
Yeah, yeah. In a way, that's a funny way to see it. And then we've talked about taxes on and off, like in the comments and in Discord and stuff. Like, yeah, how did your taxes end up turning out this year? Did you end up getting a good refund?
So I did get a refund. It was only like $1,500. It wasn't significant, but keep in mind I'm a real estate agent, so there was about $60,000 of income that I had to pay taxes on
Hmm.
there. But then just like you, I had a bunch of deductions for being a real estate agent and for owning rental properties. So one, you have depreciation, then like writing off repairs and things like that with real estate. I did get a refund. It wasn't big. I know a lot of real estate agents that pay in every single year for taxes. So any refund or as close to zero as I can get, I'm happy for that. Part of why I like growth is because it's so tax efficient. Is
Hmm.
there's with income, you have 15% minimum unless you live in particular states where there's no income tax. You have 15% minimum drag on those returns just because you have to pay taxes on them. And then
Yep.
with rehypothecation, you might pay some of, say, up to 50% or so of your portfolio. You might be paying, say, 30% taxes on that. And that really does drag on your returns. So
It does.
I don't like to sell anything ever as far as stocks. I do only powerful growth ETFs. I have 5 of them I really like. And with those, I'm always buying. So it's whether the price is down and I'm buying more shares, or whether the price is up and I'm borrowing against it. And then my drag is only whatever my margin interest rate is. So they get to grow forever, and I never pay taxes as long as I don't sell. And then I just have the drag of whatever the interest rate is, which is currently for me 4.5%.
And that's
As
also
far
tax deductible
as
too. So it's like
it is
very,
deductible. And
yeah,
then I get income. I do get some income from them, which
yeah,
helps
a little bit of
offset my
dividends.
payment. I get
Hmm.
about a third of my margin payment is covered by just the income I get from just even the growth ETFs. So
Yeah,
no, it's not quite like income investing. I'm not getting $4,600 a month. I'm getting
yeah,
more like $700 every 3 months.
yeah. It adds up for sure, especially with how many hundreds of thousands you have in those ones.
It does
And
add
like
up,
the
but it's not the same as what you get.
no, for sure, for sure. And the 5 ETFs that you kind of invest in as far as growth is like VOO, SEHG, GT, SPMO. And
Close.
what's the fifth
So
one?
I actually, so I'll go through them and then I'm going to point out why SG is no longer a part of my portfolio,
Oh yeah.
especially when
Oh,
I
I
said
haven't
I
heard of
just
this
don't
one.
even
Cool.
sell. So,
Hmm.
so I have VGT, which is by
Hmm.
far, I have like 400 some thousand. That's by far my biggest
A
position.
great one. Yep.
Then I have SPMO, which I really like, and I'm starting to make that a larger and larger position. I then have VOO, which I treat more of like a bond. And then I
Hmm.
have QQQM, which I switched out SEHG to buy
Mm,
QQQM just
nice.
to tax loss harvest. So in my Discord, Margin Mindset is in there, and he had actually mentioned to people, hey, the market's down like 10% from all time highs. If you have something like SCHG, you should definitely be tax loss harvesting and switching it into something like VUG. The reason is it's very like kind. So it's you're going to get about the same return more or less, but now you get tax benefits. So if you swap them out same day, same time, you're not really taking a loss. You're not really paying like taxes or taking a real loss because you're just immediately buying at the same price basically in something else that is going to have the same types of returns. It might not be the same exact return, meaning SCHG might differ by like 1 or 2% from VUG, but at that time I switched it out. I didn't really like SCHG as much as I had hoped. I really bought it because I got to say Margin Mindset is pretty convincing and it's one of his biggest positions.
Mhm.
So I switched it for QQQM, which I like a little better. And then
Nice.
my
Yeah, I
last
have that one too.
position is XLK, which I bought before I figured out that VGT is pretty awesome.
Oh, okay, okay. Do you think eventually you'll maybe roll it into the other one since they're kind of close to each other, or you'll just kind of keep holding it?
I just leave it. It does have a little bit more semiconductor action, it seems like. It's not
Mm,
quite the same as SMH or anything like that, but it does seem like it has a little bit more chips and things like and chips and various things like that.
gotcha. But yeah, you basically stole that last question because I was going to ask you what you feel are the benefits of your pure growth and margin strategy, but you pretty much answered it with that
Yeah,
last
yeah.
one.
So very little tax drag is the biggest thing. And then it does outperform when you, so for example, what I mean here is QQQM is going to outperform QQQI
Oh,
almost all
100%.
of the time, unless it's a
Yep.
sideways market.
Hmm.
Just you give up upside when you're doing
I get that
things.
income. Yeah.
Yeah, exactly. So I would rather have that extra 1, 2, 3% in growth and then less of a drag coming from paying taxes on your income.
Yeah, and I think that's an important note too. That like for anyone that's in income investing or whatnot, is that like you need to realize like what the trade offs are when you're investing in stuff, right? Like you, I personally think you shouldn't be like in something like QQI or SPY like thinking that you are gonna like get like as much growth as like the index it's based on, right? Yeah, you need to be cognizant that you're basically giving up some stuff there to get that income, right? Very, very important
That's a
to
very
keep.
good point, and I do see the appeal of a hybrid approach. That being said, we talked a lot about rehypothecation in the video that we just recorded on my channel, as well as we both
Mhm.
made our own video on it recently. I do see some benefit to having two separate brokerages, but just know that you can't be as leveraged if you're going to do something like that. And I do see the benefit of having a hybrid approach. Some people do that. We're all at different stages in our life and we're all on our own journey. So even if it isn't as efficient as far as like your pure growth and pure return perspective, maybe you get to offset some of your income that you would have to make from a job. So maybe you're like 50 years old, 55 years old, and you don't want to work as much, but your portfolio isn't big enough to where you can live off of margin. Maybe you do want something like QQQI or PYI, things like that.
Yeah. At the end of the day, it's like for me, like what made me switch to kind of this more hybrid strategy is that like because before I was kind of like pure growth, and then when I was kind of just investing like 30% of my salary and just like the remnants after bills, right? But then with this new hybrid strategy, it's like yeah, just kind of like leaps and bounds, like getting to my kind of income goals, like and overall portfolio goals like a lot quicker, which is nice. And while replacing my salary and not having to sell anything at the end to kind of transfer it to the income stuff like I was originally planning to do.
I know you're
It's
sort of
been-
interviewing me, but I do have a question for you. So,
yeah.
you with your portfolio are quite leveraged. Are you trying to stay equally as leveraged as you are to just maximize growth and get to that? I know you want to get to about 10K a month in income. Is that what that's going to look like? And then from there, are you going to deleverage, or what does your plan look like with that?
Yeah, so like eventually there's going to be like a crossover point where like my portfolio will be paying me a lot more than my monthly expenses are, right? So like once I reach that point, like any extra that kind of keeps getting added to my monthly income basically will go to paying down the margin, right? So at a certain point, like I could technically reach like a zero margin balance and then I kind of own everything free and clear without the margin. But more and more, as I'm kind of thinking through that, like I might maybe reach a point where maybe I reach 70% equity or 80% equity. And I'll just kind of always keep a base layer of leverage, you know, and like potentially any extra that I make on top of my monthly income or my monthly expenses would actually just kind of get reinvested in the portfolio, either more into high yield income or potentially even like growth stuff. Like that's one thing I was kind of considering after kind of seeing how successful you've been with your growth stuff too, like and just kind of really supercharge things that way. And just kind of let that keep compounding in the background and just keeping that base layer of leverage there, you know?
Awesome. Well, I do appreciate you taking the time to interview me. This was super fun, and I really appreciate your transparency. Something that I really, really value from your channel is just how transparent you are with everyone.
And with that, like, I want to give you a big thanks, Mike, for coming on the channel today. It was a super fun conversation, and like, hopefully, we can do it again sometime. Like, maybe we even do like a crazy long form one, even longer. But yeah, definitely check out Mike's channel at Recycle Your Money when you have a chance. It's all links in the description below and at the top right here. Like I always say, it's always good to be exposed to different ways of doing things and living out your brokerage. So yeah, like I've said too in the past, like after seeing Mike's content, it certainly made me take a second look at my projections and strategy and kind of see how maybe I can tweak things. So yeah, as you kind of seen with those projection videos. So I'm kind of always keeping that pure growth and margin approach in my back pocket just in case. You never know. As usual, if you appreciate all the transparency on the channel, give a like and subscribe. And if you want to see more interviews like this, definitely let me know in the comments and on Mike's channel as well. And I'll catch you in the next video. Peace.